In 2025, I made $10,000 of profit trading options. Now, this started out with a measly goal of just churning over $1,000 of profit, but with some luck, a lot of reading, and a lot of YouTube videos, I was able to 10x that goal. So, while the grass is always greener on the other side, I did make a lot of mistakes, hence why I wanted to make my 2026 strategy and share it with you guys. Now, one thing I want to be very clear with from the get go, I'm not day trading by no means, I'm not speculating on any penny stocks, and most importantly, I'm not gambling all in on one position. This has been a carefully crafted strategy from what I've gathered by learning and what I've experienced from my own mistakes. The first thing I want to explain is what type of companies do I do my option trading on? And these are DHQs, also known as dislocated high quality growing at a consistent rate, but the consumer sentiment is super against them. Two examples of this from last year are AMD and Google. Now, not only was I dollar cost averaging in both of these companies, but I was confident in them, so I also bought a leap. A leap is a long term call, and with these calls, I was able to make significant returns over time because slowly but surely the sentiment on these stocks turned around and they both pushed for all time highs. Now, a little bit more about a DHQ is it's not only a company that has done well in the past, it's a company that when you look at their revenue, they keep going up and to the right. Whatever metrics that's key to that business keeps increasing consistently regardless of the sentiment. It's actually, in fact, when the fundamentals keep doing well and the sentiment is going downwards that we have this dislocation that allows for the best profit making opportunities. The two main strategies that I used last year for trading options were leaps and cash secured puts. I did these two because they were the easiest for me to understand and I had the most practice with them anyways, so I figured it'd be the most convenient. So I'm going to stick with them going forward. Leaps are essentially long term calls, which you're saying that the stock price is going to go up over time, hence why you're buying a long call. And you have until that expiration date for the stock price to experience a big enough movement where you're in the for cash secured puts, essentially you're taking on a contract that says you're willing to buy 100 shares of said company if it's below a certain price, known as a target price. Both of these strategies are very useful to use when you're bullish on a company and you either want to get assigned shares at a lower cost, or if you just think that it's going to keep going up and to the right. Next, I want to talk about the technical indicators that I use. So I use a total of three, and one thing I do want to preface is that there is no golden indicator that is end all be all, that if you just follow the single indicator, you will win 100% of your trades. That's not what it's about. I use a mix of indicators, and when there's an alignment of all three being in the favor, I know that statistically the odds are probably more in my favor than normal, so it makes sense to take a trade. The first one that I use right here, and you'll see this one, is the Bollinger Bands. Now, the reason I like this is I studied economics in school, so it follows a very simple rule that says within 95% of the time, of all probability, the stock price will be in between these two bands because these are two standard deviations on each side. And this is the mean right here, this blue line in the middle. So I know that if I see a crazy pullback like here, when it came out of the Bollinger Band, that realistically it's going to go back into the Bollinger Band, right? So that's one indicator that I use. And the way I use this is if I see it, that for example, here, the stock price fell outside of the Bollinger Band, I know statistically it has to go back into the Bollinger Band towards the mean. The second one I use, which is the one you see here at the bottom of the screen, is the RSI, right? The way this works, if it's above the 70 level right here, it's overbought. That means there's a lot of buyers and the company's probably gonna have a little bit of a pullback towards, again, the mean right here in the middle. And then if it's below here, it's usually a better time to buy because it's oversold, right? A lot of people are selling the shares. So that's a good time to enter, right? So as we see here, this is one example where both it was outside the Bollinger Band and the RSI was under 30. So it was a good time to get into a position and trade that upwards. You could have held it or even bought in some more again and kept going. Now the third indicator that I use, which you can't currently see on here because I don't have the paid version of this, is the 200 moving average, right? So here we see that Netflix, the company we're looking at, is currently trading below its 200-day moving average. Now, I really like Netflix as a long-term play. I think they're going to keep growing, especially when they acquire Warner Bros. Discovery. So I think Netflix is a solid company to position because they have a lot of the market for entertainment at about 10% of it, right? There's also this strong negative trend line here, which is what I'm waiting to see either a rebound on this support level or this support level where if I see a bounce off these, I'm going to look to get into a strong position, right? Because I think overall Netflix in the long term will keep going back up towards new all-time highs. And one other thing I do want to point out right now is that I'm even interested in buying some shares of Netflix because of how much the price is discounted. So I think it's a great time to be looking at Netflix for the long-term hold, not the short term. And I cannot find, oh, it's right here, I think. Price range, yeah. And if we were to look at Netflix today, it's currently trading at about 34% from all-time highs. So this is one that I'm interested on looking into leaps on, and then I'm gonna be slowly but surely starting to dollar cost average as we approach this $85 level right here. If it breaks below it, I'm gonna keep buying more and more until eventually we see a reversal. One thing I do want to say that realistically, if it falls below the support level of 82, we can probably expect it to go down and hit a lower support level, maybe in the 70s, 60s, or even 50s, right? Which, of course, since I'm bullish on this company long term, I will continue to do so. Again, my goals when I trade options isn't to make some 1000x return in a week or so. It's to have a consistent about 4 to 6 monthly, which will compound over time and outperform the market. If I do this consistently, this will allow for some pretty serious gains, and I can really see this portfolio grow over time. Now, one very important thing that I had to learn the hard way is having profit taking strategies. Last year, I had a couple of times where my position would run up 40, 50, even 60%. However, because I was greedy and I kept wanting more and more, I wouldn't close out this position, I'd stay in it, and it ended up going into the negative, or I'd have to wait again before I'm profitable in that trade. So there was a lot of opportunity cost in those moments. As a rule of thumb, what I've developed is if I'm ever up 20% in a single week, that's phenomenal returns. There's assets that don't even return, most assets don't return 20% in a year. So if I can do that in a week, I should always take that. And then to follow that up, if I'm up 40% in 1 month, I should look to get out of those instantly. These are just some profit strategies that I made so I can avoid the mistakes that I've made in the past. With all this being said, trading options is definitely not something that everyone should do. It's something that you should only pursue if you're truly interested in keeping up with your position on a daily basis. It's a very hands-on thing where you got to do your research and you got to make these educated bets with strong hypothesis about the companies that you're investing in. So if you have any questions, drop them down below. I'll try to answer them to the best of my ability, and I hope you enjoyed this video. As always, take care and have a great day. Bye bye.